of the company is divided into a number of small indivisible units of a fixed amount, and each such unit is called a share. The fixed value of a share, printed on the share certificate, is called nominal/par/face value of a share. However, a company can issue shares at a price different from the face value of a share. Free to price its issue, if it has a 3 years track record of consistent profitability, and in case of new company, if it is promoted by a company with a 5 years track record of consistent profitability. I authorized share capital. I issued share capital. Share capital IV called up share capital V paid up share capital VI reserve share capital. Reserve capital is different from capital reserve. Capital reserves are part of reserves and surplus and refer to those reserves which are not available for declaration of dividend. Company can be divided into following categories. I preference shares. They enjoy preferential rights in the matter of A. Payment of dividend, and B. Repayment of capital. Shares can be of various types, which are as follows: A. Cumulative preference shares. B. Non-cumulative preference shares. C. Participating preference shares. D. Non-participating preference shares. E. Redeemable preference shares. G. Convertible preference shares. H. Non-convertible preference shares. I. Equity shares. The shares can be issued by a company, either 1 for cash or 2 for consideration other than cash. The nominal value of security. Thus, the issue price of shares is generally received by the company in installments, and these installments are known as under: first installment, application money; second installment, allotment money; third installment, first call money; fourth installment, second call money, and so on. Last installment, final call money. As for cash upon the issue of share capital by a company, the under-mentioned entries are made in the financial books. 1. On receipt of the application money, bank account drive with the actual amount received. 2. Shares application account. Allotment account drive with the amount due on allotment. Share application account drive with the application amount received on allotted shares. 2. Share capital with the amount due account on allotment and application money. Bank account drive with the amount actually received on allotment. To share allotment account. Sometimes separate application and allotment accounts are not prepared, and entries relating to application and allotment monies are passed. Drive with the due amount actually received on call. To share call account. According to Section 79, a company is permitted to issue shares at a discount provided the following conditions are satisfied. A. The issue of shares at a discount is authorized by an ordinary resolution passed by the company at its general meeting. Specify the maximum rate of discount at which the shares are to be issued, but the rate of discount must not exceed 10% of the nominal value of shares. C. At least, which has already been issued. E. The shares are issued within 2 months from the date of receiving sanction for the same from the government. Therefore, the journal entry to record discount on the issue of shares is as given below. C. Doctor discount on the issue of shares A/C drive. 2. Share capital A/C amount on allotment of shares that are per share and are issued at a premium. The premium amount is credited to a separate account called securities premium account because it is not a part of share capital. According to Section 78 of the company's expenses of the company. C. To write off the expenses of, or commission paid, or a premium amount called with application money. iBank A/C Drive total application money plus premium amount to share application A/C application amount per share to securities premium A/C number of shares allotted X premium amount per share to share capital A/C number of shares allotted X per share for capital. Called with allotment money I share allotment A/C Drive number of shares allotted X allotted and premium money per share to share capital A/C number of shares allotted X allotment amount per share to securities premium A/C number of share allotted X premium amount per share. Calls in advance at the time of receiving the value of shares in installments share installment money received in full calls in arrears I.e. money received is less than due calls in advance i.e. money of future installments received beforehand bank A/C is debited with full money received calls in arrears A/C is debited with the entry for bank A/C calls in advance A/C is credited with entry for bank A/C. Shareholders fail to pay the amount due on allotment or calls. The total unpaid amount on one or more installments is known as calls in arrears or unpaid calls. Such amount represents the uncollected amount of capital from the shareholders, hence, it is shown by way of deduction from called-up capital to arrive at paid-up value of the share capital to be shown in the balance sheet. Calls in arrears. The following journal entry is recorded. Calls in arrears A/C Drive amount of unpaid calls to share allotment A/C to share calls A/C. The articles of association of a company usually empower the directors to charge interest at a stipulated rate on calls in arrears. According to of interest bank A/C Drive. To shareholders A/C calls in advance. Some shareholders may sometimes pay a part or whole of the amount not yet called up. Such amount is known as calls in advance. According to Table A, interest at the rate of 6% is to be paid on such advance call money. To call in advance A/C when calls become actually due, calls in advance account is adjusted at the time of the call. For this the following journal entry is recorded. Calls in advance A/C Drive call amount to the balance in calls in advance of pay-up capital. The accounting treatment of interest on calls in advance is as follows. Interest due interest on calls in advance A/C Drive amount of interest due for payment to shareholders A/C.